Kanishke, do you agree with the thesis being floated that we are at a U-turn on corporate profits here?
Yes. In short, yes. I've had the benefit of being able to think about it for a few seconds longer than these guys. So we think annual average inflation this year will be 23%. And we are expecting 1% decline in real GDP this year. So nominal GDP up 22% this year. Next year, we are expecting 5% inflation. And next year, we are expecting about 5% real GDP growth. So nominal GDP growth of 10% next year. Interestingly, we see the U in GDP happening already. So actually, Q2 numbers are not out yet, but our forecast is for a 1% up on Q2. And Q3 and Q4, we are forecasting between 4 and 4.5% growth for the second half of this year. Because we spend a lot of time modeling the macro, so these numbers are fresh on my mind. In terms of interest rates, we think by the end of this year, T-bill, 1-year T-bill should be something in the region of 10 to 12. And we think that T-bill should end between 8 to 10%, within the next 9 months to 12 months. It should find, and then that should be a relatively stable place for it to then move from, depending on how the macro, how we manage monetary policy thereafter.
So let's also talk about earnings. Where do you think 2023 earnings will go to? We've only seen one quarter of results announced yet. Any sense, any chance that you can tell us what you anticipate in 2024?
So I assume you're talking about FY24, which is
you can take it as calendar
Let's
or
talk
FY.
calendar
Just
year. So the June quarter earnings were out, and it was very low. So I think it was market earnings were in the 50 billion, 55 billion, something like that. And if you just multiply that by 4, it comes to 220. For context, market earnings in 2021 calendar year was about 370 billion rupees. Important to bear in mind that we've had maybe 70% inflation since the end of 2021 to today. So as Asanka said, even if you take 30% higher than 2021, and I just did these numbers in the office before turning up today, if you took a 30% up on the 2021 earnings for next year, I'm just at a very macro level. If you take that kind of assumption, you end up with a market PE of 6.5. So, gives you an indication at a time when interest rates are 10%, a market PE of 6.5 looks extremely interesting in a market where you don't get taxed on capital gains on equities.
For context, quickly, the current market PE is what?
5.8.
5.8? Okay, about.
Are you sure?
Yeah, the current market PE on the trailing numbers are
on the
5.8.
Trailing 4 quarters.
Yeah, but if
fine.
you annualize the last quarter, then the market PE comes at like 18.
Yes, that's correct. So I think because last quarter the earnings came down over 60%, right?
Exactly.
So quarter on quarter earnings came down over 40%. So yeah.
Just to add to Kanishke's point, just take this example. Now they just allowed importation of buses and trucks. The pre-crisis, the prices at which these will be brought down will be materially higher than the pre-crisis prices. So let's say the banks are to lend to bring these vehicles down. So just imagine how big, what will be the increase in the working capital lending of the bank simply to finance importation of these vehicles and extrapolate the NIMs on it. So which is why if it comes to banks also, though the banks have seen a substantial run from the beginning, if you actually value it on forward earnings and forward books, I actually think we are barely scratching.
Let's talk banks and look at what level of impairments they've made. What we are talking about is there'll be 2 phases to this. The first phase is where those impairments taper off. You start making fewer impairments.
Yeah.
Phase 2 will be write-backs of those impairments, right? Now, all disclaimers said, we may have interest in the companies that we're talking about. HNB, 31st of March 2023, net book value was 190 billion. they wrote off 92 billion rupees in the 12 months ending 31st of March 2023. I mean, this is a meaningful percentage of book value. If you start writing back some of these loans, because at 30% people couldn't afford to service their debt, at 10% or 12% they probably can. If you start, and 70% of the lending of Sri Lankan banks is collateralized. So you start writing back, you're talking about very significant book value growth. And then even, we think 70-80% price to book value is high. I mean, okay, first of all, I don't necessarily agree, but that book value can increase dramatically.
Banks are trading at a book value, say H&B, for instance, at 0.5% book?
No, now no longer. It was. Now it's more like 0.7, 0.8.
Right.
But the book can grow so fast.
So fast.